Hello, everyone. Welcome to another episode of the Bitcoin Brief with your host, Tone Vase. And I am once again joined by Jimmy Song. You're like me now. Every show, a different location, man. Look at you.
Yeah, kind of. Well, you're the one at home this time. But yeah, like I said, I've been working on a project and just finished yesterday. We're sort of in beta testing mode a little bit, but yeah, we'll have an announcement as to exactly what it is in the next week or so. But yeah, very excited about the project. I'm off to another conference that I have to go to later today, related to my publisher O'Reilly. So that's going to be fun too. But yeah, I mean, it's just part of what it means to be in the crypto space, I guess.
All right. Very cool. Let's jump right into our stories. And here we go. Let's start with the Bitcoin hash rate. As the price continues to rise, so does the hash rate. I'm a big believer that the price value drives hash rate. Some people see it the other way around. It doesn't really matter. But the Bitcoin network hits 80 quintillion for the first time. There's really no units here, which is weird. I'm assuming this is petahash.
No, hashes per second. Quintillion hashes per second is about quintillion is 1,000,000 terahashes.
Yeah, like I had no idea. So this is 80, right? Okay, so this is 80
million terahashes per second.
Okay, there you go. Yeah, I'm not familiar with what quintillion. With how much?
Yeah, it goes trillion, quadrillion, and then quintillion. So easy. It's like 1,000,000 times a trillion. Yeah.
Well, let's assume this is a lot. We know it's a lot. I don't have I don't. It sounds like a lot. We don't have a chart. I don't have a chart of saying how much it is over time. I probably should pull one up, but we can talk about this in relation to other blockchains, where I guess this site is a little bit outdated unless it takes some form of an average. And we on this side, it still shows it as 75, not 80. But in comparison to other blockchains, I mean, this is just ridiculous, isn't it?
Yeah, and you know, I've done some calculating, and I totally agree with you that that the hash rate is following price, because right now it is very profitable to run. I think the most energy efficient miner on the market is the Dragonmint T1, and if you look at that and just look at the profitability, it's actually quite profitable to mine with that. So there's motivation to bring more T1s onto the market and so on, especially given that like a Dragonmint T1 right now sells on eBay for like $400, and you can make something like 70 or 80 cents a day using that. So I mean, depending on what sort of energy costs that you can get. So it's very profitable. But that said, like you're pointing out, it also makes a lot of the other SHA-256 coins a lot more vulnerable. And in particular, BCH and BSV are very vulnerable. And I mean, they continue to go down, and they are going to hit a halving pretty soon. I think you pointed this out in a tweet earlier today, that once their halvings happen, then they're going to be even cheaper, and then there's probably going to be a price decrease, so it's going to be even cheaper to exploit those. That said, like I'm not sure like how much a 51% attack hurts either chain. I guess you could do something like spam both chains with lots and lots of transactions or something to bring down their full node, something to that effect, and test the single points of failure that are inevitably out there. But I mean, that said, it's those two coins are more or less irrelevant to Bitcoin at this point. At one point, with the emergency difficulty adjustment and like sort of the high price of BCH right after the fork with respect to Bitcoin, it made some sense for miners to switch back and forth. But given the lack of liquidity and everything else, and the very low hash rate and the securability, I mean, I would be surprised to see, them have any effect on Bitcoin, with respect to hash rate. And I suspect most exchanges are considering increasing the number of confirmations required from both chains just because it's so weak. And they're the real ones at risk, because if you're going to hack either of those with a 51% attack, you're really just going after the exchanges. That's what you're doing.
Yeah, no, and it looks. I mean, I don't know how accurate these numbers are, but it looks unreasonably cheap to attack some of these coins, like insanely cheap. Um, Even like Bcash, 20 grand an hour to attack the chain. That seems unreasonably cheap.
It does, but I mean, you have to have the mining equipment and you have to have the electricity. I mean, it's not very much compared to Bitcoin, but it's still not cheap to set all that up. And then if your attack fails, you've sort of like immunized them a little bit. So I don't know. It's not something that you would do unless you want to attack a particular exchange, because they're really the ones that get hurt. If you do a 51% attack, you're generally going to only monetize it with some sort of a double spend, and the way to liquidate a double spend is through an exchange. So, like, you're not really hurting BCH as much as you are hurting the exchange that is listing BCH. I guess you can do that, and depending on the number of confirmations, and this is why confirmations for both those coins are way beyond 6 for most exchanges, is because if you are doing BSV, the potential to be double spent goes up. So instead of just like, they don't take 6 confirmations for BSV anymore. They take something like, 100, which means that it's not 1 hour that you have to attack it. You have to attack it for like a full day. So
Right, but that also means that all of these crazy people talking about how fast and instant Bitcoin Cash is, but you got to wait like 25 confirmations in order to actually, trust the transaction.
Yeah, and that's kind of the thing that a lot of people. I mean, this is BCH like talking out of two sides of its mouth. If a 51% attack is possible, then why would you trust one confirmation? You should. I mean, like that's ridiculous. It can easily get exploited by almost anybody, and I mean, it's fine if you're transferring $5. I mean, you're out $5. Who cares? But if you're transferring like $50,000, you're going to have to wait a long time. But at that point, then you're waiting way longer than you would on Bitcoin. So it doesn't make any sense.
Give it 9 more months, and no one is gonna have $50,000 worth of Bcash.
That's a very hopeful thing to say, Toad. We'll see.
Yeah, no, and I did tweet it out earlier today, and this is what I've been saying now for a long time. Altcoins are going to die. They're going to die economically, they're going to die technologically, or they're going to die due to hash rate. Because if your coin is a proof of work coin, then the halvings destroy your coin, because your coin has to increase in value. Like Bcash has been around for 2 years now. And the price of a single Bcash is lower today than it was when it started. So what do you think happens to your coin if on a 4-year cycle, if its value doesn't rise? Its mining gets destroyed.
Yep. And that's something that we're seeing. Even if you combine BCH and BSV value, I think currently it's like $300 something. It's combined like lower than what BCH was originally right after the fork and stuff like that. So yeah, this is one of the things is if it's not being used as a store of value, what ends up happening is that transactions might be very cheap, but there's no real reason for people to hold it, and they instead go to something that makes sense to hold, something like Bitcoin, and they only go in and out as they need to. And the irony, of course, is that Daniel Krawitz wrote a fantastic article about this very thing, about how altcoins are snake oil about 4 years ago.
Right, and now he's promoting a
BSV.
coin.
Yeah. But his argument was absolutely sound, which was that if you had a coin that was used just for transactions or for a particular purpose, then what would happen is that people would get in, buy the thing, and then get out. That's it. And nobody would hold it. And that means that nobody would actually store value there. And that's essentially what's happening to BCH and BSV, is that people don't feel like I mean, they're claiming to be fast. I don't think they are. But even if that were true, what would happen is people would, okay, like, let me just hold a tiny amount in BCH for the $5 in coffee, but the vast majority of my wealth is in Bitcoin because I want to store value in Bitcoin, which is much more secure than BCH. And then I'll buy my $5 latte, and then the merchant will convert back to Bitcoin.
No, but that's not what's going to happen, right? I mean, look.
Right. But that's the argument, even if it is like quote unquote faster or whatever. Ultimately, the time to hold inside BCH or BSV gets shorter and shorter. And at that point, like the price gets lower and lower. And that seems to be what's happening.
And even in that scenario, right, even if you are convinced that your altcoin is faster and cheaper to transact in, but you realize that it's going down in value and you're not going to hold it in that, very, very soon you realize that the amount of time and effort it takes you to convert into a faster and cheaper altcoin isn't worth it the extra 25 cents that it would cost you to send your actual Bitcoin.
Yeah, exactly. And the thing is, like with Bitcoin, it's actually pretty cheap, right? Like I've been able to send, 1 sat per byte transactions on Bitcoin for the last like year or so. It's been a really long time since I've had to wait, say, more than like 6 hours for something to come.
I ran into a little bit of a problem sending 1 set transaction, so I don't do it anymore. But I've been doing all my transactions between 10 and 20 satoshis per byte. They've been costing me between, I don't know, 10 and 15 cents a transaction, and they've been going through like in every block.
Yeah, and that's
in the next block.
This was the big argument. So what seems to be happening is that markets are realizing, okay, you really want store value. I mean, like USD is a great transactional currency. You could use it almost everywhere. But
it's excellent.
The fact of the matter is it doesn't store value well at all. And this is why people put money into real estate and stocks, both of which are probably used more by people that are using it as a store of value than anything else. And hence why those asset prices are at all-time highs with respect to any fiat currency. But that's the thing. Where do you store your wealth? Where do you store your value? That is the much more critical question, and that's what Bitcoin is competing against, and not against Visa and PayPal and Venmo or all of these other companies. And this is something that we've been saying on the show for a long time. But a lot of these people that are on BCH, BSV kept telling us we're wrong. Hey guys, look at the scoreboard, man. Like people are storing their wealth in Bitcoin, and your coin went down like 5% against Bitcoin yesterday. What does that tell you? And it has been consistently doing that for the past year. Where do you think people are storing their value? It's not your coin, and there's a very good reason for that. And at a certain point, your cognitive dissonance is going to have to come to an end, or you're going to go bankrupt. And for your sake, I would suggest you really think about what store of value means before you go bankrupt. I mean, you could keep your belief or keep your money. You can't have both.
Yeah, no, and we couldn't stress this enough for years on this show, and people are starting to realize it, and it's a horrible death spiral, right? Like if no one is storing your coin, the value of your coin goes down. No one is going to want to mine your coin, and therefore the chances of it being attacked go up. The requirement for more for more confirmations goes up, and therefore it makes it more expensive and longer to send, right? Like it's just this.
Yeah, and it decreases the like desire for exchanges to list your coin. I mean, if it costs like if it's 100 confirmations, it's like, well, there's not going to be that much action on this coin for an exchange. Not only that, like running a full node for like BCH or BSV is like really expensive. So like you can either trust somebody, which exchanges are loath to do because that's like the path to a 51% attack, or you spend $20,000 on computing equipment so you can like run a full node on BSV, which is not like making you like a few $100s a day. I mean, that might make sense right now, but like the amount of trading on BSV or BCH is continually going down. Like the volumes are going down as much as the price too. So it's I mean, I see like delisting as the inevitable. I mean, it might take a long time, but that's the direction that you go in with this debt spiral. And then, lacking liquidity, these coins just sort of die a death that's quiet, I guess.
Yep, and there it is, guys. Like overnight in the U.S., and it's very cheap. Like your transactions will go through at 1 to 2 satoshis per byte overnight. At least they did last night.
Yeah, and right now, I mean, it tends to be like right around this time in the day, a lot of transactions happen, and people moving in and out of exchanges. You have the BitMEX once per day withdrawal kind of stuff. But yeah, I mean, that's normal. If you're willing to be patient, if you have low time preference, then like 1 satoshi per byte's fine. Depending on what you're doing. If you're paying somebody, you might want to do a little bit more, but it's really not that hard, guys. Like just like hold off a little bit. You don't need things right now. This is this leads you to make some terrible decisions, like those people that went over to BCH and BSV.
All right, so sticking with mining, we're actually talking about Bitcoin today. Blockstream had a huge announcement. Apparently, the work on this started 2 years ago when they went into a deal with some, very advantageous electricity costs and electricity deals. I don't know. Did you know about this before the news broke a day ago?
No, I didn't, and I mean, I'm not surprised. I was always wondering how like Blockstream, like what parts of Blockstream were profitable and so on. I mean, they do fund tons of research and so on. But yeah, it makes sense for them to do that, even just to sort of hedge against sort of minor collusion and stuff like that too. And this is, I think I saw a tweet yesterday about how this is going to be the new reality for Bitcoin companies. People are going big companies are going to want to run about 1-2% of the hash power of the network just as a hedge against everybody else sort of colluding against them or something like that.
I've been making this argument for over 3 years now, and the way I used to say this argument was, suppose Netflix enters regions to lower their credit card fraud fees. Netflix can be in every TV all over Africa, accept Bitcoin payments, not worry about credit card fraud. And if that business is bringing them an extra $1 billion a year, why not spend $200 million as an expense on a mining facility?
Yeah, and the thing is, like, I don't think this is a loss or anything of that kind. Actually, they're making a lot of money doing it.
They could.
Yeah. Well, so from what I understand, they have a mining facility, but they also have customers. So what they're doing is essentially co-locating a lot of the mining equipment into their facility on behalf of other companies, including someone like Fidelity. And as a result, what they have is essentially something like a mining pool that has a decent percentage of the Bitcoin hashing rate. I mean, the only thing that I think in this story, that was one announcement. The other announcement was that they're about to launch a mining pool that I guess their mining facility is going to sort of lead, and that is a better hash mining pool. And Better Hash is a protocol developed by Matt Corallo. And the idea is that individual miners of that join a pool now get to decide what the block looks like instead of the mining pool themselves. And you still do all of the decrease in variance by joining a pool, but each individual miner gets to decide what the block looks like, and most of them are going to be motivated to include the highest value transactions and so on, instead of like censoring or doing something stupid or whatever. Almost certainly all of them will be adopting SegWit, like prioritizing SegWit transactions because it makes economic sense to do so. They're going to support RBF and stuff like that, which from what I understand, Ampool doesn't really support after some analysis was done on it. So more people are going to want to join those pools just because it allows for more freedom and so on, and more say in how the block is constructed. So that and they're going to launch on that. I think they've been working on the software for a while. So that will be combined with their mining facility to decrease variance significantly. And that'll be excellent for the Bitcoin network because everyone will get to see how much better Hash is. The only thing about this whole story that was a little bit weird was the offer to co-locate mining hardware at their facility. Now, it's not that big a concern, but it does look a little bit like a cloud hosting 2.0 kind of thing, in the sense that they have physical custody of the mining equipment, which Luke Dash Jr. pointed out on Twitter. That's no better than cloud mining. If you control it, then I have no way to verify that you're actually using the equipment the way I'm saying. The implication being that at any point they could point that hashing power somewhere else or do weird things with it. So I do get their argument on that, but I mean, if you trust Blockstream, that may be an option. If you don't want to at least co-locate the actual miner in Blockstream's facilities, you can still run it at home, but join their Better Hash mining pool and have more of a say in what a block looks like.
Hey, let's dive a little bit deeper into that statement that you said, because I do trust Blockstream, and a lot of people have a problem with that statement because you're not supposed to trust anyone, right, in this space. So Daniel Kravitz and I always get into it, right? Like he seems to have a problem with the fact that I trust the Bitcoin core developers, and he says I'm not supposed to trust them, and yet the coin that he trusts may have 0 developers, right? So we don't even know if they have developers, right? So what is, and this is a big talking point for the Bitcoin haters, that there's 2 talking points. One, a Blockstream is taking over everything, and now they have a more of an argument in that regard, in that now Blockstream is also involved in the mining aspect of things. This was my criticism. I'll be fair here. This was my criticism against Roger Ver and Bcash stuff, because he's one of the biggest investors in one of the biggest wallets, blockchain.info. He owns the media with Bitcoin.com, owns the Bitcoin Twitter handle, runs the Bitcoin.com mining pool. They have their own wallet. It's like one person is like over 60 or 70% of the entire space. So this is the same argument going towards Blockstream, that now they have a large say in every element, right? Because a Blockstream is responsible for the liquid sidechain. Blockstream has I'm assuming, if not, Blockstream is going to have the most popular wallet with Blockstream Green. It's actually a pretty cool wallet. Blockstream is one of the Lightning implementations. Now Blockstream is involved in mining, and there is an argument there that they are now taking over. And I personally don't have a problem with it, because you have people like Luke Dash Jr., who like are consultants for Blockstream that are constantly giving their company shit on Twitter. Like the people in this company, they really are there to make sure this stuff is as decentralized as possible and that no one can actually hurt the Bitcoin network. And everything that they do is centered around the fact to increase value of Bitcoin and help the network. And the best way to help it is to provide trustlessness. All right, Jimmy, your thoughts on everything I just said?
Yeah, so that has been the criticism that somehow Blockstream is like the puppet master pulling strings on everything, and it's like a fun conspiracy theory for BCH, BSV people, and that it's been a criticism. It has like no basis in reality. I mean, they fund maybe like 2 or 3 core devs. I mean, they fund more people on Lightning. They are running this mining pool, but the whole point of this mining pool is that it's trustless. You get distribution in, Blockstream doesn't get to set what the block is. Each member of the mining pool does. Like that's much better than the current system, which is that the pool gets to decide what the block looks like instead of the individual miners. So in that way, it's much better, and they're trying to bring forward more decentralized technologies like that. The other stuff with respect to are they taking over on wallets and stuff and Lightning? I mean, they're one of many implementations for both things, and it's ridiculous to say that they're taking over in any substantial way when they don't have more than like 20% of the market in any of that stuff. I mean, a healthy decentralized network looks like what we have in Bitcoin, which is that you have lots and lots of little players that are participating in each of these industries. What an unhealthy or more centralized system looks like is what you see in BCH and BSV, where you only have a couple of mining pools or something like that, and where you only have a few wallets and you only have a few nodes. I mean, that's very unhealthy, and it allows for all sorts of shenanigans. I'm still waiting for the day when the block reward is so small on both chains that they decide to like inflate their currency instead or steal.
Well, no, they're gonna go proof of stake, right? Because what's gonna happen with these shit like Litecoin, like BCH, Ethereum's been trying to do it for a while. In that, like they're dying. Like Ethereum has always wanted to go proof of stake, and I said this over a year ago. The simplest path for Ethereum to get to proof of stake is a complete destruction in the price of the Ethereum token, because that's when your mining goes away, and that's when you can step in and save your blockchain from the evil capitalist of miners, is to turn it into proof of stake. So, and right now, someone like Roger or, like someone like Craig Wright, I mean, they're all about like, hey, in order to save our coin, we A, need to create inflation, and B, we need to get rid of the mining because we're at risk of a 51% attack. The best way to do that is to go proof of stake and accumulate as much coin as you can before you go proof of stake, because then you get to perpetually make more money as long as you convince stupid people to keep buying your coin. So all of this shit is going proof of stake. Bcash is gonna go proof of stake. They're gonna do it under the umbrella of we are here to protect the environment, and we are going proof of stake, when in reality it's because a couple of guys have bought up a bunch of coins, or they lost so much money on coins, and now their path to to get rich is to just print more coins for themselves by having coins.
Yeah, that's a possibility as well, but they're gonna have to fix the problem that they created for themselves, which is that like the incentives aren't aligned on either of those coins or any of those coins. It's this what central banks essentially do all the time, which is that they need to manage their economy because they're the central printer, and all blame goes to them whenever something doesn't work. And I mean, there will be BCH and BSV and ETH and LTC people that are going to complain about the price being too low, and they're going to be like, okay, well, we need to increase the price, or that are going to complain that my transactions aren't going through, or my transactions got reversed, or these exchanges complain about how they're getting double spent against, and we're going to delist your coin. And they're going to have to kowtow to these exchanges and say, okay, well, we'll change things to proof of stake, and you'll be one of the stakers all the time, and you'll get to verify those, or something like that. Like, there's so many ways in which this will play out, but it's all the hallmarks of centralization, which is that they need to manage their economies because they don't have. They're going to listen to the complaints of their users, because otherwise their coins would be worth nothing.
All right. Speaking of exchanges, we have a couple of companies that constantly get hacked, and one that managed to avoid some hacks. So let's talk about Binance first. So Binance is proving once again their potential incompetence as for being an exchange this time around. So apparently, as the story goes, so remember the 7,000 Bitcoin hack?
I do.
So apparently, according to this, some white hat hacker decided to try to hack the hacker. And in his attempts to hack that hacker, he managed to get his hands on like 60,000 or something of KYC information of people that KYC themselves on Binance. So again, like, I don't know where the truth is here, but this is how the article reads. I haven't looked into it. I personally don't really care. I know my information's not there. So, so while attempting to hack the hacker for the Bitcoin, he ended up getting his hands on 60,000 or more KYC information from Binance. And he tried to, I guess, now extort Binance for 300 Bitcoin. And those negotiations went south. So all the KYC information was released. Now, here is the interesting part. So right here is a statement from Binance saying these images do not contain the digital watermark imprinted by our system. The company said our security team is hard at work pursuing all possible leads. So they basically said that this wasn't us. And then CoinDesk started calling some of these people, and they said, no, that's definitely me. And that was me KYCing on set date that the picture claims to have. So this just looks very, very bad for Binance. It now looks like it might have been the middleman that Binance was using to do this kind of KYC. They're also discovering that this KYC information is borderline useless, because one of the 3 people that CoinDesk contacted said, well, yes, that's my information, but that's not my picture. It's someone that looks similar to me, but that's not exactly me. So that's gonna end very, very badly, right? Because if you got your hands, because like a lot of our information is floating around the web anyway. So if someone takes your license and replaces their picture with your picture and then goes on camera like this, like in this, saying, yes, that's me, I just KYC'd, right? So a lot of this is going bad. There's more details on this. This is the extortion part. So apparently that guy was in contact with Binance for like a month, and negotiations broke down. So there's like a whole detailed analysis, though Binance is shutting down from working with the US customers. I didn't really read this entire article, but it just gets very, very interesting. So general thoughts on Binance's competence, Jimmy?
Well, this is inevitable when you have a central honeypot like Binance does, and really every exchange. And this is why security is just so important. It's you have a lot of customer information, and you have a lot of people. A lot of sensitive customer information. You might have credit card numbers, passports, and all this other stuff. And of course, that's going to be a target along with all the Bitcoins and so on. And you got to have really, really good security. And it's crazy to me that people go in and out of these exchanges and leave their personal info and all this other stuff when, like later down the line, all of this stuff can come back and like terribly haunt you. And you know, I mean, you're leaving yourself vulnerable in many ways by doing that. So I mean, it's just kind of the reality today. We're hoping for a more decentralized future where you don't have to give all of this info in order to trade. This is why non-KYC exchanges are more popular if you can you know, register for them and so on.
Right, but they come with their own risk of the exchange stealing all your money. So
Right.
there's really no good solution. All I can say is this. I can't remember the last time I heard a story like this from Interactive Brokers, Fidelity, Options Express, you know, Ameritrade. Like, but in Bitcoin land, this is like monthly.
Yeah, well, the industries are not that mature,
Well,
and they're
right,
not
and
used to
right, and
paying
that's
huge fines like these other companies have for, you know, anything wrong that's happened. So
right. And this is, and again, this is the big argument. Well, Tone, you're against innovation, you're for barriers to entry. Yes, there are industries where you have to be competent in order to start a company and deal with people's money and their information.
well, so I mean, the solution is to hold your own keys and only go on them for very, very short amounts of time, and no doubt know the risk you're taking when you do. And that's I think what a lot of people do. But I mean, some people are stupid; they leave it on the exchange and so on. But that's, you know, I mean, that's kind of what happens.
All right. So let's talk about another hack that actually didn't happen. Man, I hate giving Coinbase credit, but apparently they were able to get around a potential attack on their system. Had to do with something with was it Firefox 0 days?
Yeah. Yeah, so so it doesn't necessarily have that much to do with Bitcoin, except that was sort of the motivation for people to do it. But the actual details of the hack are absolutely fascinating. So what had happened was there were a couple of Firefox 0 days that somebody found. And if you don't know what a 0 day is, it's basically an exploit that hasn't been patched yet. So it's out there in the wild, and the developers of Firefox don't know about it, that sort of thing. So there are a couple of 0 days that the attackers figured out that they could use in order to exploit like a computer, escalate the permissions and so on, and be able to do certain things from a particular computer. And they decided that they needed some you know, some clever way to use this to make money. And so they targeted, I guess, high value places to get you know, access to the internal network, and Coinbase was one of them. And the attack was extremely sophisticated. They first
Not really. If they were sophisticated, they would have gone for Binance, clearly.
well, I mean, I think they try. I think the implication in the article is that this was just one of very many, and
Yeah, no, that was a joke.
okay, well, so okay, so what they did was they first exploited some stuff at the University of Cambridge in London, and they got access to you know, some of the accounts there, and they were able to set up very similar looking websites as the University of Cambridge website. They were able to compromise some of the emails. So what they did was they sent an email to like a couple dozen Coinbase employees, claiming to be from the University of Cambridge, which, since they had hacked the email, that's what it would show up as, saying, "Hey, we're in the running. We're trying to evaluate, you know, who should win the Adam Smith Award in economics at Cambridge, and we would like your opinion." And basically they did this whole social engineering thing where, you know, they wouldn't actually get them to the exploit page until they've qualified them as somebody of high value within that particular company. And vast majority of these emails like went nowhere. People didn't have time for them, but there was, I guess, one employee that went through the process. They wanted Coinbase to influence the Adam Smith Award or something like that. And eventually they got taken to the page with the exploit on it. And at that point, the 0 days on the fire. Well, so they set up a page that said you're using a browser other than Firefox, please try again with Firefox or something like that. The employee went onto the page with Firefox, then it executed the exploit, and essentially what the 0 day did, with that exploit, they were able to take over the person's machine, and using the machine, they were able to, like at least try to sniff around the network and see what vulnerabilities were from the inside. What the Coinbase security people realized very quickly was that it was doing a curl command from the console into some phone home or something like that, so somebody could get details of maybe the logins or keys or something like that. And that's what they noticed, and then they dug into it and found the 2 0-day exploits that were used on the page that they found, and so on. And they reported all this to the Mozilla Foundation, which then patched it, and so on. And they did a great job. I mean, the security team in this particular instance did a fantastic job gathering all of the evidence so that the Mozilla Foundation could patch Firefox very quickly. So, I mean, good job to them. But this is the level of sophistication we're talking about. I mean, if you think about like the amount of time and effort that went into this thing, they had to hack another server, they had to set everything up, they had to use both exploits and make it feasible. They had to have this plan on the Adam Smith Award and all sorts of stuff. It was extremely elaborate, and doing all of that probably cost a decent amount of money. And their analysis of the code, I think, is correct, that these aren't just like fly-by-night developers. These are actually pretty good developers, and they're not cheap. So, doing all of that is kind of crazy, but that's what they did in order to foil these 0 days.
Right, and at the same time, you got to make sure that your engineers at your company, especially a Bitcoin company, can avoid getting hacked.
Yeah. Well, in this particular instance, I don't know if it was a developer. The blog post made it sound like it was maybe like somebody in BizDev or something like that was, keen to make sure that Coinbase had like a larger voice in the world, and that's probably why they, kept corresponding with the Adam Smith Award person and so on. So. Yeah, I mean, and they went ahead and told the University of Cambridge your IT systems are compromised and so on, and apparently they they patched whatever security holes there were and cleaned their system. But this is what we're dealing with, and this is a reminder. Bitcoin has like the lengths that people are willing to go through to hack exchanges. They've done way more than that to try to hack the Bitcoin network, and they haven't been successful. And that should give you confidence that the Bitcoin network is actually quite robust and secure.
Yeah, all right. We're going to go ahead and leave it here with the stories. I was going to just go through and show you, like I was looking like last 3 days of stories. Everything is like no human required. Commerce Bank develops blockchain payments for automated trucks. Where is it? There's more. SBI crypto exchange adopts tech to help. Oh no, wait, that's regulatory. So everything is like, we're putting this on the blockchain and we're putting that on the blockchain. Everything goes to the blockchain.
Yeah, CoinDesk, you really need to like stop promoting a lot of those stories. I know the companies are keen to like advertise essentially through your stories, and maybe you get paid for it or something like that. But guys, they're not doing anything.
Yeah, like but here's the thing though. Here's what I didn't see on CoinDesk over the last like 2 or 3 days. Litecoin news, Ethereum news, Bcash news. Like shitcoins are really dying, aren't they?
They seem to be. I mean, they're. I mean, you could look at the charts, I guess. I mean, they have an inverted triangle, or I mean, a downward triangle
Oh
pretty
yeah.
much on all of them, or something, and or they've recently broken through, or whatever, and they're hitting lows that you haven't seen against Bitcoin, at least since like early 2017. It's kind of a really like. I thought last year was altcoin winter. I mean, this year is like deeper winter, or like and yeah, it's just getting
I mean,
worse
Jimmy,
and worse.
look at this. Today is August, what? Today is August 9th, right? It's been
Uh-huh.
3 days since the last Ethereum article, and then it was 4 days before that.
Yeah, so they're not making much news, and people have noticed that the Ethereum Twitter is like down to like 3 people tweeting now. It's like none of those people, like I think they're kind of depressed, and everyone takes the lead from Vitalik and Joe or something like that. They yeah, like when you have a centralized coin, the people don't, the rest of the people follow the lead of the center, and those are Vitalik and Joe and people like that. So yeah, it's they're not saying anything. That means everyone else is going to stay quiet, and there's a lot of bickering on the devs, among the devs and stuff like that, about how they should proceed, and it's kind of getting ugly.
All right, so we're gonna go ahead and wrap this up. You can find Jimmy Song on his website, Programming Bitcoin. You can check out his book. Go ahead and buy that. Amazon's probably the best place. And you have any? You don't have any listed classes coming up yet, right?
No, but I will be at BitBlock Boom in Dallas next
Right.
week,
I'll be
and
there as well.
I will also be at Bitcoin Is, which is a conference being held, bitcoinis.com, I think. Conference by, oh yeah, so that's BitBlock Boom, and bitcoinis.com, I think, or bitcoinis.com.
Let's see if it shows up.
No, it's like bitcoinis.com, or bitcoinis _ is the Twitter handle. Anyway, that's by Russell Okung, left tackle for the Los Angeles Chargers. He's putting on that that conference. I will be in LA, I think September 1st.
Oh, are you speaking there?
I am, as is Joe Carlson, Safety, and Peter McCormack. I think Alex Gladstein's also from the Human Rights Foundation will also be speaking there.
Oh, cool.
So it'll be really fun.
I'm kind of still around the US at that time. Maybe you can connect me to him after, see if he wants anybody else.
Okay, yeah, we'll see. I mean, apparently he's going to bring a bunch of NFL players, and
Cool.
and they'll learn about Bitcoin, and it'll be a really fun time.
Awesome. All right. Yeah, I gotta look into that one.
Mm-hmm.
Okay. Thank you, Jimmy. And of course, you can check me out on tonevase.com. We do have our next event coming up in Bali, the Financial Summit. Check that out. This is more trading and investing focused. We have my good friend Ugly Old Goat, Van Zen, Willie Woo, myself, Socrates. It's so unfortunate that Tyler can't make it. He was really looking forward to it, but that's just really, really sad. And we do have Leah, and there'll probably be a few more. So go ahead and check that out. I do have a workshop coming up at BitBlock Boom the day before the conference. I have my workshop happening there in Texas. So you can check that out as well. And if you want to support the YouTube channel, please use the affiliate page. I will be filling out the calendar today. I finally decided on my travel for most of the year. All right. Hey, guys, I know everyone's waiting for the price, but I'm going to come back in 1 hour with Socrates, and we're going to do trading Bitcoin. So no price right now, but we'll be streaming in 1 hour. And come on back, and we will cover everything that has to do with the price. All right. Thank you so much for watching, guys. I'm going to go ahead and stop screen share, and I will see you all on the next one. Jimmy?
Well, this song is done.
Bye, guys.